Good morning and welcome to the trade setup right here on BloombergQuint. I'm Niraj Shah, and you have to say it's a interesting day of trade. I can only put it that way. We don't have the kind of cues that we had yesterday necessarily so, but we might have a start which is marginally positive or maybe in the positive and then continue as well. So remains to be seen. Let's first digest what happened across the world, and a couple of interesting things did happen. So firstly, the US markets, and they had a reasonable outing in trade. It was anticipated yesterday. Europe closed well. US had a fairly decent outing under the circumstances. So no complaints on the trade front from a bull perspective. No big gyrations, no big trending moves, just about a meandering day which ended in the green. So not bad. But the key is what happened to crude oil, and there's a big development out there. Now, what essentially happened in terms of news flow is that oil, it fell after the biggest oil ETF said that it would sell out of its June WTI futures position as the physical oil storage levels continue to balloon. This is United States Oil Fund LP. It said it'll move all the money it invested in the front month June WTI oil contract, which triggered a massive price relationship essentially. So typically developments like these tend to have a big impact. US stockpiles continue to rise as well, and all of that. So there is a swelling glut, as the chart shows, in oil, and as a result of which there was a sharp gash in crude prices in the session yesterday, and that is something that all of us have to keep in mind. It does have a bit of a bearing. Previously, crude price falls were associated with risk-taking abilities or the risk-on, the risk-off mode in the market. I think that has gone now. It is no longer the risk-on, risk-off mode indication, but more what's happening to specific oil contracts. And maybe if this continue, then oil India might benefit as well. So a bit of a risk-on, risk-off mode as well as when it comes to crude oil, but largely a storage problem that is now starting to be seen. Asia, how is that reacting? Marginally positively, you would have to say. SGX Nifty, irrespective of what it does, the trend is positive. So, I mean, SGX Nifty is one indication, but what will happen during the course of the day is the other thing. And I think that is probably the more important thing. So why do I think today, more than the SGX Nifty, the trade setup is more important? Simply because the telltale signs of some more uptick are there, but there is also resistance. So one, the story that we did yesterday on BloombergQuint.com, it's a Bloomberg story by my colleague Siddharth Singh, which said that the MSME stimulus might be coming in anytime soon, and that possibility, as well as benign global markets, augur well for a long trade in the session today. And for this long trade to succeed, the Bank Nifty, as I said yesterday, the Bank Nifty needs to come to the party, and it did. But the Bank Nifty is the key for the Nifty to break past the 9400 hurdle. That's 9350, 9400 is laden with resistances. And for the Nifty to go past that and stay above, more importantly, the Bank Nifty needs to contribute. I think what might help today is also the oil beneficiaries. Yes, the likes of ONGC and Reliance in particular, for more reasons than one, might have a bit of a corrective move, but the others might be positive, and therefore that should augur well. The currency could be an interesting one too. We should watch out for two things in the session today. More importantly, one, the FOMC meeting begins. Not a big impact on trade today, maybe a big impact on trade tomorrow and Thursday. So it's a policy that meeting that might be without too much of gunfire, simply because the Fed has already fired dozens of ammunition already, and therefore you do not know how much more will happen in the policy. But nevertheless, the statements from Jerome Powell and the press conference would all be important, so do watch out for that. And the Axis Bank board meeting today for Q4 results, fundraising. I think there is an Economic Times story which says that they might buy stake in Max Life. So all of these would be important ones to be monitored in the session today. Do watch out. Therefore, what are the stocks that one should monitor in the session today? 3 or 4 which I think are important. Reliance. They've announced a board meet on April 30th for a rights issue. Typically, rights issues happen by a SEBI-determined formula, and typically at lower prices if the stock has been on an uptrend. This one has been on an uptrend. I reckon that you will have the rights issue pricing at a lower price, and that might just, if indeed all of this turns out in the shape and form that everybody's believing, then maybe there's a bit of a corrective move in Reliance on offer. Keep in mind, oil correcting also has that bearing. So watch out for Reliance. That might be a bit of a drag after the move that it has already seen. So that's one important stock to monitor. Ambuja, well, strong operational quarter led by lower fuel costs and tight cost control. Morgan Stanley's maintained the overweight rating with a target price of 186. The others have been bullish as well. We've seen what happened to ACC after the numbers, which were Not the best in terms of the quarter, but better than what the estimates were. Ambuja has done an encore. You might well have a big reaction in Ambuja today. Be mindful of that. Adani Power, the numbers were left a lot to be desired. Not that it was unexpected, but revenues were down about 8.2%. EBITDA was down about 66%. Margins 3.3% versus 9%. Net loss of 1,300 crores versus a profit of 634. Let's see if this one corrects a bit. And Just Dial is an important one. They're going to consider a buyback on the April 30th board meets. I reckon this stock could well have a positive outing in the session today. So do watch out for these as well. These are amongst the most important ones. There is also IndusInd Bank, and maybe that will react, but it had a big bang reaction in trade yesterday itself. So let's wait and watch what happens today. I dare say if the Axis Bank Max Life deal does turn out to be true as the Economic Times is reporting, then that could be a big spinner for Axis Bank as well, because it joins the leagues of some of the other private banks which have an in-house insurance company as well. So it will be interesting to see what happens to that one. Well, lastly, I just want to end today's piece with a data point that we used a few days ago, and I think I'll keep on repeating this during the course of the next few times with some gaps. But we are in a bit of a bounce. Nobody knows if this will sustain or no, but it always helps to look at history. And 2008 was the nearest comparable for India in terms of what happened to markets. And in that time as well, there were four large bounces that had happened: 22nd Jan to 5th Feb, 17 March to 2nd May, and so on and so forth. The graphics would be there. And essentially, there were some 12%, 16%, 21%, and 25% bounces that we saw from those levels. We are probably around a 20% mark right now. So don't get fooled into believing that this is the end of it and the coronavirus crisis has been forgotten. Bounces can be extended for a long period of time on a large percentage point as well, before which the downtrend resumes. I'm not suggesting either way. I'm not expert enough to say that, but do be mindful of that in a bear market, which we seem to be in, bounces tend to happen and happen very, very frequently. Be mindful of that. Thanks so much for tuning in today to the Trade Setup.